guys, this is Dr. Tom Carr here of drstoxx.com. drstoxx.com. This is the fourth of a four-part series I'm doing on how to trade momentum stocks. You've already learned that most people lose money when they try to trade fast-moving stocks. You've also learned 2 tricks you can do to turn that around and make sure you're profitable. In this fourth video series, you're going to learn one final hack on how to maximize your profits on every trade. Make sure you stay tuned to the end because I'm going to send you a free manual just for watching this video, how to trade momentum stocks profitably. Enjoy. So welcome to part 4 of how to trade momentum stocks profitably. In the first video we saw that a momentum stock is a stock in a sustained uptrend, the strength of which is increasing, and that uptrend is expected to continue over the near term. We also saw in video 1 that there's a dirty little secret about trading momentum stocks. Trading them based on price momentum alone loses money. We did a back test of just a momentum scan based on price alone. It did not work. In fact, it lost money. Then in video 2 and 3, we looked at how we could build a profitable scan by inputting certain parameters in addition to price momentum. We first built our scan using a filter that required all stock prices to be at $10 a share or higher, average trading volume of 200,000 shares per day. We then inserted a low PEG ratio, that's a price to earnings to growth ratio of less than 1. That's a valuation metric that's very low, which means a lot of earnings, a low stock price, and a lot of growth of earnings. And then fourthly, we put in the requirement that our companies have raised their earnings estimates sometime in the last 4 weeks of at least 5%. Now we're going to add one more filter. You're going to see how this last filter really ramps up the returns. Back at our backtesting software here, you can see the scan that we've been working with. We have our price momentum filters down here at the bottom. Relative percentage change in price over 24 weeks, 12 weeks, 4 weeks, and the last week. And we're looking for the top 30 stocks, and then 20, and then 10, and then 5. We've inserted the PEG ratio of less than 1. We've inserted the requirement that earnings estimates have been revised upward sometime in the last 4 weeks of at least 5%. Minimum volume 200,000 shares per day, price over 10. Now, let me run this scan just to remind us of how well this scan did. We're looking at a back test period of starting at the very bottom of the 2008-2009 crash. That's March 13th. And we're running it all the way to the end of September of this year. That's over 6 years of data. And we're rebalancing the portfolio every 4 weeks. And here we have our back test, and you can see that we're looking at a return, a very nice, healthy return up here of around 670% versus the S&P 500 over the same period of 208%. That's an annual compounded growth rate of 36.2. That's excellent. That's very, 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 very good. Now, look also, the drawdown is only 15.2%. We're only trading 5 stocks versus 500 stocks in the S&P 500. So this is a very, very robust system. These are the kind of drawdowns that you can live with. Now, watch what happens when we put in one last filter. We're now going to require that all the stocks that pass through our screen are members of the S&P 600. The 600 is the S&P stocks that are small cap stocks. And we're ready to backtest this system with the requirement now that all stocks passing through our filter are small cap stocks, stocks that are known for their growth, and stocks that if they're growing and showing momentum and fairly priced because of valuation, and they've recently increased their earnings. Let's see what happens when we do this, backtest this particular system, and you'll see just how profitable momentum stocks can be. All right, now take a look at this. Now we're into some serious returns here. We're up to 4 digits, 1,129.9% versus 208% for the S&P 500. That's an annual compounded growth rate of 46.1. Our drawdown is still reasonable at 19.8 for only trading 5 stocks versus 500 stocks for the S&P 500. So I do want to show you one quick thing before I let you go. This is not the scan that I use in my momentum letter. I'm not going to give away the secret formula, but let me just show you how well my system performs. Here I've inputted our aggressive longs trading system. It's one of 3 systems we use in the momentum letter. I have the same look back period, 3/13/2009 to 9/25/2015. I'm using a 1-week holding period because our momentum letter is published every week. It doesn't mean we trade stocks every week, but we are updating the list every week. Let's see how this works. All right, guys, look at this, 12,362% return for the momentum aggressive longs trading system that we use in the momentum letter. That is amazing. And anyway, the only way to get access to that is to subscribe to the momentum letter. Go to drstoxx.com. All right, that's it for now. One final video in this series to wrap it up. God bless. Bye now. Hey guys, if you like this video, do us a favor, click like down below. Leave us a comment as well and tell us what other videos in the area of trading you'd like to see. Don't forget to subscribe to this channel right here. If you're watching from a cell phone, you can click the link down below. And if you click this link right here, we're going to send you a free copy of my new trading manual, How to Trade Momentum Stocks. Just leave us an email to let us know where to send it. God bless everybody. We'll see you soon.